and gentlemen, good day and welcome to Steel Strips Wheels Limited Q3 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. And now hand the conference over to Ms. Shruti More from Anand Rathi. Thank you, and over to you, ma'am.
Thank you, Shubham. Good afternoon, everyone. On behalf of Anand Rathi Research, I would like to welcome you all to Q3 FY26 earnings call of Steel Strips Wheels Limited. Today, we have with us Mr. Dheeraj Garg, Managing Director, Mr. Rahul Kumar, Chief Financial Officer, Mr. Pranav Jain, DGM Finance, and Mr. Puneet Sharma, DGM Finance and Accounts. We'll start an opening comments from the management team, post which we will open the floor for Q&A. Now I'll hand over the call to management team. Over to you, Dheeraj.
Thank you, everyone. Good afternoon. Hope everyone is doing well. I hope everyone had an opportunity to go through the financial results and investor presentation, which we have uploaded on the stock exchange and our company website. So I start with the Q3 numbers. For Q3 FY26, our revenue stood at 1321 CR compared to 1075 CR in the same period last year, reflecting a growth of 23%. This quarter was distinguished by record monthly sales in November and December, which demonstrates the resilience of our diversified approach that caters to every category within the auto industry. Despite sluggish demand in the export market, we delivered strong performance supported by healthy domestic demand. EBITDA for the quarter came at 128 CR compared to 118 CR, a growth of 8% in the same period last year. This performance is the result of our continued focus on premiumization, operational excellence, and the strong partnership we have built with the OEMs. Together, these factors have enabled us to sustain growth during the period. Now, coming to our 9-month performance, revenue for 9-month FY26 stood at 3708 CR compared to 3195 CR in the same period last year, reflecting a growth of 16%. This growth was primarily driven by increased demand in the domestic market, supported by government reform that have boosted consumption across the auto industry. We remain optimistic that this momentum will continue across the domestic sector. EBITDA for the 9 months grew by 3%, largely due to a decline in our high-margin export segment, which was impacted by the tariff situation in the US. Profit after tax for the 9 months stood at 138 CR. Overall, these results highlight the resilience of our domestic operation and our ability to deliver growth despite external challenges in the export market. So the aluminium segment has been a standout performer for us over the last 9 months, and we anticipate that this segment to further grow, supported by recent GST reforms and RBI easing of finance costs, which have boosted passenger vehicle sales in the country. Alloy wheel have been a key driver, contributing approximately 37% to the total revenue and 20% in the volume terms. We expect this momentum to continue, with alloy wheel increasing their share of overall revenue going forward. Now, second one is our aluminium knuckle segment, which continues to build strong momentum with adoption expanding beyond EVs into ICE automotives. We are on the track to reach an annual capacity of 5 lakh units by the end of this year, with a planned scale up to 11 lakh units next year. The business is currently operating at near full capacity utilization and has already delivered revenue of approximately 54 CR. Going ahead, our focus remains on broadening the customer base by onboarding additional OEMs, where we are seeing encouraging progress. So now our 2 to 3 wheeler business delivered strong performance this quarter with healthy growth in both volume and value terms. This was supported by the implementation of GST 2 reforms, which has enhanced affordability of two-wheelers and boosted household disposable income, thereby driving a demand. Additionally, the festive season this year was one of the strongest in recent times, further contributes to the robust growth in this segment. On export side, demand from the US market remains somewhat subdued amid the ongoing tariff-related uncertainties. While we continue to monitor development closely, our approach has been to stay agile and well-positioned for a normalization in the demand once there is greater clarity on the trade framework. In parallel, we have continuously focused on diversifying our export base. Europe has emerged as a key growth market for us and now accounts for over 58% of our export revenue. We expect this diversified mix to remain intact during this year, throughout this year, reinforcing our diversified approach to global markets. Looking ahead, we remain confident of maintaining business momentum in the coming quarters, supported by healthy order visibility across our key domestic segments such as tractor, aluminium wheels, and commercial vehicles. While our diversified presence across automotive segment positions us well to navigate the current volatility in the export market. With this, we now open the floor for question and answers. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Saurabh Jain from Sunidhi. Please go ahead.
Hello. Yeah. Hello, sir. So congratulations on the wonderful set of top line. For the last couple of months, we have done a record turnover. Sir, looks like domestic realizations have remained stable, but exports realization just, if we do the back math, so I have witnessed a substantial jump during the quarter. So how do you see this, and are these sustainable? What kind of trend do you see? And also, if you can, within the question, if you can explain how rapidly and how smoothly we are able to pass on the increase in raw material prices?
I think I'll take the last one question because this comes repeatedly in every meeting. Once for all, I want to clarify that raw material is a pass-through. So every 3 months, there's a change in aluminum prices that is set up by the customer based on the previous 3 months rates. So there is an absolute pass-through. Maybe sometimes there's a lag, but that sort of averages out for the whole year. So there's no problem there. And also with the steel business, it's quarterly set, and it's a long old tradition, so there is always a pass-through on raw material. We cannot afford to have not a pass-through on raw material. Okay. But coming back to your earlier questions, you see, this year what has happened is that all our verticals, barring exports, have outshone. You have seen that in the industry, with the CV industry growing 16% year-on-year for the 9 months. And we see the aluminium wheel penetration of our products increasing with the newer launches this year. So that has been a big boost for us. Similarly, knuckles, although it hasn't done 100% of what our expectations were, but still we are going to be touching close to 80-90 crores turnover, close to 80 crores turnover by the end of the quarter. So generally speaking, and then we have tractors doing really well. Tractors again have been showing us a 12 to 13% growth rate. And so everything has done well. Even Pascar has done well. But of course, as we all know, Pascar steel business is a low margin business for us. Now, the missing point has been the exports business. Our steel business of exports has been compromised to the extent of 300 to 400 crore rupees from the American market. And that was a high margin business. So that brought the EBITDA per wheel to a very high extent. If you look at the fourth quarter of last financial year, we had the highest EBITDA per wheel, 265, if I'm not mistaken, or something around that. So this quarter, we've done close to 260. And that is mainly on back of increased truck wheel sales, increased tractor wheel sales, and a stupendous growth in the aluminum segment for us. In fact, one of the previous calls that I attended, everybody was complaining about the second quarter performance. And I told them very clearly, because the capacity utilization has dramatically fallen in CV, dramatically fallen in other, even in aluminium, we were not able to get that kind of traction. But with the GST reforms, things have just changed. Suddenly, every segment is doing well. Every domestic segment is doing well. And but exports is down. Now, on the exports front, as you have seen, my colleague Pranav mentioned that 58% of our revenues are coming from Europe. So we've made good traction in the export market in Europe, and that too to OEM sales. Out of competitive reasons, I may not be able to tell you exactly what we have been able to achieve, but we are able to get a lot of business from the OEM space in Europe. And that is going to grow, and in fact going to double this next financial year as we go on. So yes, the American hit has been there on steel wheels, and hopefully it'll go away in a sense that in 3 to 6 months we will see some resolution of this matter also. But this is something that we have to watch for. But generally, we are absolutely bullish. In fact, I remember saying that in April that this is the best time for us. But suddenly we had a big drop in the second quarter. But now I can say that with the GST reform, this is a pakka rally, and this will go on. And our capacity for CV wheels has just come at the right time. We have expanded our capacity in CV wheels in Jamshedpur, and we are totally sold out in the CV segment. We are totally sold out in the tractor OTR segment. We're completely 100% running there. On aluminium wheels, we are completely sold out. So our capacity is 5 million, so we are about to reach 5 million. We are hovering around 4.6, 4.7, but we'll hopefully hit 5 million wheel annualized in the month of March. So all in all segments are firing up well, except for our steel wheel business for the export market. That's something that is not in our hands. And I think margin profile going forward, as I said, we don't talk in percentage terms. We talk in absolute wheels, absolute number per wheel. And that absolute number per wheel, as I said, in spite of exports of steel wheels not being there, we've reached 260. And one may also add that with a higher utilization, our conversion costs are coming down, our fixed costs are coming down. So you will naturally see an increase in margins in the month of January to March, because we've had this bull run from, let's say, November, December mainly. But I think going forward, January to March looks like a turnover, again a 20% turnover growth increase from the previous quarter. I think we are looking at 1450. I don't know how much is this done. This time we done 50 lakhs.
1320.
Yeah, so 1300 would go close to 1475. So that's not 20%, but still a strong performance. And that is because we are sold out. And we see that the next financial year coming forward will also see such buoyancy, because there is no lack of demand. When we speak to OEMs, the OEMs are very excited about their business. And they're excited about exporting cars out of India. So this is another phenomenon that you must follow, is that the OEMs are also exporting cars out of India. Just don't look at the sales of cars within India. So again, I just go back to my earlier comments that this is the best time, but I think it's even a better time now with the GST cuts.
Okay. But sir, exports realizations were both in steel and alloy wheels are looking substantially up, like more than 20-25%. So is there any one-off or this will sustain in the coming quarters?
What is your question regarding the margins in exports?
Exports realization, sir. Both in steel and alloy wheels are looking substantially up.
So it is up mainly because of, I cannot spell out the reason, but high valued item wheels are going. I just mentioned to you that we have grown a lot of business in Europe. So please get a hint from that, and that is the reason why you see a per unit price going up.
Okay. And sir, my last question on the profitability.
And also the fact that the Americans aren't selling, because their steel is obviously cheaper than aluminium. So you have to make the connect. Okay.
And sir, my last question is on profitability. Of course, I understand you don't talk about in percentage terms, but just trying to understand, despite a higher alloy wheel mix and substantial jump in the top line, our EBITDA margins kind of looking suppressed below 10%. Historically, our peak EBITDA margins used to be 12-13%, but with more value addition pie and also, substantially up top line, the margins look under pressure. So, do you think in the coming years we can expect previous peaks to be reclaimed?
Listen, the point is you are talking about the wrong question. The question is that raw material price increases invalidate this argument. If the raw material price is going up by 10%, and then you expect the EBITDA of the company also to grow by 10%, it's not possible linearly. Obviously, it will come down when the selling price goes up, and the profit margin per wheel is what is more important to us. And the margin per wheel has gone up from 240 in the last quarter. It has gone to 260 this quarter. Right? Yeah, so obviously there is an improvement because there is a higher value addition business done, plus volumes have gone up. So similarly, let us not look at 10% because the raw material prices have moved up for both aluminium and steel.
Okay. Got it, sir. Thank you. All the best.
As you heard this question, I hope the audience gets it, that let's not debate the whole thing again and again. Let's look at how much I make per unit, because I sell in units.
Sure, sir. Thank you. All the best.
Thank you.
Thank you. A reminder to all participants, anyone who wishes to ask a question may press star and 1 on your touchtone phone. The next question comes from the line of Vikas Sharda from NT Asset Management. Please go ahead. Yes, Mr. Sharda, you may proceed with your question.
Yeah, hi. Thank you for the opportunity. I have a couple of questions. One is that you have announced a capacity expansion in alloy wheels and aluminum knuckles. So what would be the total capex you're looking for, say, FY27?
Okay, so let me clarify one thing. We've already completed the capex for 5 million wheels. So in March, everything will be commissioned fully with all the extras that we need to have for the basic capex. So that capex is over. Now we are doing another capex in Bhuj, where we had bought the AMW factory, and we are utilizing the building and the land and the development around it. We are saving close to 100 crores in capex cost there, and we are putting up a new facility to make aluminum wheels as well as aluminum knuckles. So the total expansion cost will be around 420 crore rupees. And so
that is for the expansion.
Yeah. So
and including the maintenance capex, how much will it be total for FY27?
So 40, you can add 40 CR for brownfield maintenance capex, but there will be other capex with regards to maintenance only. That's it. Maintenance capex is about 40 crores, right? Yes. So 420 plus 40. And let me tell you one thing, that this investment is meant for the export market and also for the Indian market. But this is a unique investment that we are making in aluminum wheels, because it will cover every category of aluminum wheels sold in the world. So it will be a very comprehensive project, and we'll be looking at the entire world region for these products. Similarly, for knuckles, we are expanding for our existing customers in India, but also for the export business in Europe. We are very close to making strategic deals with European customers regarding aluminum knuckles and other related aluminum products. I think there is a question regarding this also. How are we diversifying? So within the we started off with the low pressure die casting business with wheels. Then we got into counter pressure die casting with knuckles. So similarly, there are other products that can be made with these technologies, and we are investigating and aligning with our customers to manufacture them and send them abroad. So it's going to be a contract based with the European customers.
Understand. So next year, 420 plus 40 crore, and how much would it be for FY26 in aggregate?
FY26 will be around 225 to 250 CR.
Okay. Understand. And how much?
We are shared for the next year.
Sorry, could you repeat that?
That this will include some part of the total capex, which I have already told, that 420 CR of the capex which we are doing for alloy wheel and knuckles, and this will be broadly certified into 3 years. Some of the part which will be added in FY26, some will be covered in FY27, and remaining 10% or 20% will be covered in FY28.
Got it. Makes sense. And so second question I have is that what is your cost of debt? Because when I look at your P&L now, your interest expense is running at almost 120 crore annualized, while your gross debt is 900 crore or so. So is there any additional borrowing cost or some finance cost part of it? And in general, what is your borrowing cost?
Yeah, the total overall debt cost is around 8 to 8.5%. Right, average cost is this much, and there are some of the factoring lines are there, right, and that factoring is adjusted in the debtor. There are debtor factoring limits which are there, and in the balance sheet, same is adjusted against the debtors.
Understand. Okay. So that increases the total number. Yeah. And finally, the one question that hello.
Yeah, please.
Yes. So one question, in your MHCV segment, you report your market share and it has come down YOY, and it shows that for Tata Motors, your share of volume has gone down, percentage share has come down for steel wheels. So any particular points to highlight there?
I don't think for medium heavy commercial vehicles our share has gone down. I don't know why this projection has come to you. But overall commercial vehicles, there are light commercial vehicles that we don't sell into. But for medium heavy commercial vehicles, I don't see our share of business come down. Last what I saw was about 42%. 52%.
52%.
On CV. Yeah, 52% on CV. So that I don't think has changed much.
So if you look at, say, last year, third quarter, it was 61%.
It can vary from quarter to quarter, but I think for the whole year you might want to look at that. But 7% drop is not possible because we are in fact getting a bigger market share than the official market share that the customers have offered us. So maybe there is some error in our reporting here. I will double check this aspect. But clearly, I mean, our truck sales are up 16% over last year. So we have not lost market share. I don't think the industry has grown 16%.
Yes, so if you look at the numbers, in the last year, third quarter presentation, it was 61%, so it shows a drop, but yes, it could be an error.
It could be an error.
Thank you.
But as of now, there has been no loss of market share for medium-heavy commercial vehicles. That I'm very sure about. Because that's our bread and butter. And that's a really good business, and we don't lose market.
Well, that 62%
all right, thank you.
is only. Now, this 52% is for both MSCV and LCV. And so the total share is 52% if you include both MSCV and LCV.
But only medium heavy commercial vehicles, what is SOV?
Yeah.
It's 62%.
It's medium commercial. Overall is 52%.
We just said includes.
I said no, it include. Overall is 52%. Last time the one share that is 62. That's all.
I think we'll come back to you. We'll clarify this. I think we'll clarify through SGA will clarify this aspect. I'm sorry for this confusion.
Thank you. The next question comes from the line of Nishita from Sapphire Capital. Please go ahead.
Yes. Hello. Am I audible?
Yes, please go ahead.
Yeah. So I had this question on the capex that you are going to do in FY27 in Bhuj. So what is the total capacity going to be in that plant?
Okay. So the capacity will be 1 million in the aluminum wheels business and 1 million in the knuckles business. 1.2 in the aluminum wheels
0.6
and 0.6 in the knuckles.
Okay.
This will be an additional capacity. It will be the additional capacity. So 3/4 of a million in knuckles or 0.66 and 1.2 million in car wheels.
Okay, so the total capacity, like with the existing plant and the new plant, the capacity will
it will be
grow
6.
to that, right?
Again, so it will be 6.2 for aluminum wheels and it will be 1.1 for knuckles.
Okay, understood.
Yeah.
And so, how fast will we be able to ramp up this facility?
All these projects will start before Diwali this year, this calendar year.
Okay, understood. And what will be the peak revenue?
I think you can
from
do
this facility.
The peak revenue would be about, let's say, 600 crores from the wheels business, 600 to 700, because we're doing a lot of value add, so you can take it close to 700 crores, or let's say 600 crores, and for the knuckles, this should be a business of, let's say, about 200 crores.
Okay, understood. And and how are we going to fund this capex?
So it will be a mix of debt as well as our internal accruals. So we foresee a very robust EBITDA accretion going with this fourth quarter and the whole next year. We have very bullish projections. So I think a little bit of debt will come through depending on when we need the cash flows. But you can say about 200 crores net debt would be added, perhaps less, more around that number.
Okay, understood. And so I just wanted a clarification. You mentioned that our EBITDA per wheel is 260 rupees.
Which one?
So,
the current quarter, I think what my calculation tells me is 260 rupees.
Right, so that's for aluminum and steel wheel both?
Yeah, it's a product mix. Everything is normalized on this weighted average.
Okay, understood. And so going forward, where do we see this EBITDA number?
it's a good
Is it going
question.
to be in the same?
No, listen. So last time when I spoke, I said that when we did 265, I was very bullish that we would hit 270 immediately in this financial year. But unfortunately, because the volumes dropped in the second quarter, it didn't fructify and the Trump tariff started. So the Trump tariffs really spoiled the party for us. But notwithstanding that party getting over, we have found a lot of business value addition in India itself. And we are now, as I said, utilizing 100% of our capacity. So I think 270 should not be far. We are hoping that in the fourth quarter we'll hit 270. But for next year, we can come back to you with the numbers that we project, because we want to, we want to give it some more time to see how the market develops. But clearly, we are looking at a 20% revenue growth next year. So next year we're looking at a turnover of 1,000 crores easily. So that's very visible without the Trump tariffs getting over. If the Trump tariffs get over, then we can hit 6,500 crores because there's a lot of things that come into play. We get a bigger share of business in America because our competition in Thailand and in Vietnam is coming under investigation for circumventing duties. So if these two things happen, that those guys get caught up in that trap and suddenly tariffs in India open up, then we can hit 500 crores additional revenue from America. Because so in nutshell, we can hit 6,500 crores next year, but 6,000 crores is very visible and with better margins. So now you have to coming back to your margin question. As I said, 270 is achievable in this fourth quarter of this financial year. And for the next year, I think we'll come back with numbers to you, but they will be definitely better than 270. So our entire order book for aluminum is sold out for the next 2 years. So it's not that we will lose business. I mean, if the Indian market performs the way it should and the export business that we have tied up continues to grow, we should have no problems next year. This is, I think, easily possible without the new revenue coming from Bhuj facilities.
Okay. So just a clarification, you are suggesting that 6,000 crores we can achieve besides the Bhuj facility revenue?
Yes. This is visible from the existing assets I have in control right now.
And how much do you envisage that the Bhuj facility will contribute in FY27? Is it going to be significant?
Not very significant. We are going to start it around Diwali time, and then customer validations will take time, 3 to 4 months. So we are not counting much revenue, but I still feel that there is a chance of an upside there, because if the market is doing really well, then the customers will try to approve the facility real quick and get on with their business with us. So right now we are not including that in our forecast, but clearly there is a possibility of an upside from that level. I mean, from those assets.
Okay, understood. Thank you so much.
Thank you.
Thank you. The next question comes from the line of Shashank Kanodia from ICICI Securities. Please go ahead.
Yeah, hi, good afternoon, sir. Just wanted a clarification. So the existing allowable capacity is 50 lakh units, and we are over and above adding 12 lakh units, right? At the
Yes, you are.
Right. And the aluminum knuckles, our existing plan is to take to 10 lakh units, and this additional units, 6 lakh units will be additional, right? So total goes to 10
additional. We are right now at 5 lakhs, so that will make it 1.1 lakhs or 11 lakhs. It will make it 11 lakhs.
नहीं सर, आपने 10 लाख का तो प्लान पहले ही बताया हुआ था ना, so this 6 lakh should be incremental to that.
Next financial year में पूरा करेंगे ना, पूरा प्लान 1.1 million का है, but ultimately we will go into the next financial year if we want to add. But right now, Mehsana facility is 5 lakhs and the Bhuj facility is 6.6 lakhs. So 6 lakhs, so 11 lakhs total ऐसे बता रहे हैं आपको हम.
Okay. So aluminum wheel will become 62 lakhs and knuckles will become 11 lakh units.
हाँ जी.
Okay. Secondly, sir, in the initial Concalls a couple of years back, you mentioned that the EBITDA per wheel in aluminum segment is double or twice the steel wheel, right? Is that assumption still holds true?
That's a great question. It depends on which market are we looking at. If we compare domestic market today, and if we compare the aluminum and the steel together for the car business, yes, that still is, and that's really what is driving our margins up. I mean, as I told you, the steel wheel business is really not giving us that much margin. But I also mentioned that in the next financial year, 26-27, things should start improving. So yes, there will be an increase in margin from the domestic supply of steel wheels in India. So that's a good point. Thanks for reminding about that. That's going to happen.
So, sir, if that is the case, if I go with the share of revenues that you share between steel and alloy wheels, so you are roughly making roughly 450 rupees per alloy wheel, right, as a EBITDA per unit?
Listen, I cannot mention anything to you because I don't want to reveal my trade secrets to you. You are a good mathematician. All I would say is that.
No, sir, so the point I'm trying to come is that you seeing 300 crores of capex for 12 lakh units of alloy wheels, right? And with such kind of EBITDA per unit, we just generating 50 crores of EBITDA, and if I deduct the depreciation, that comes to around 35 crores of EBIT. So 300 crores of investment is just giving me 35 crores of EBIT. That is subpar investment. Don't you think so? 12% ROC?
No. I think we did our calculation on this, and we are getting our payback in 7 years. 7 years we're getting our money back, and we are basing it on different EBITDA margin that you're assuming because a lot of this is going to be export. And these
7
are
years
special.
itself it's not very encouraging, right? So 1.7 gives you 14% kind of IRR rate, just 14%, right?
Yeah.
And you're saying that you're saving 100% capex on this front.
It's very expensive. You're absolutely spot right. I mean, look at the other companies who are in suffering. I mean, today you want to set up an aluminum wheel plant. It's very expensive. It's atrociously expensive. Nobody will be able to get into this business. And obviously we are assuming a higher margin than 450. But on a conservative level, we said it's 7 years, but it could be faster also, depending on the value chain that we lag on to. That was on a very conservative basis that we did an internal calculation. But what we are currently getting as EBITDA is more than what you have calculated.
Right.
And it will be much more than 450 rupees.
So one observation, in FY22, we make something like 3,500 crores of revenues and we made 200 crores of PAT. As we end in FY26, we are at 5,000 crores of revenues, roughly 1.5x of that base, and we are still at 200 crores of PAT. So this is something which...
In 22, there was an anomaly. There was a gain of one-time windfall gain of 60 crores from steel appreciation. So that is basically what has, caused this confusion. But if you take that out, we are steadily growing. And we have pointed this out earlier also.
So we have not really, at 50 crores of kind of quarterly PAT. It's been a difficult task for us to really up our game from that kind of a run rate. It's been quite many quarters that, we are hovering at 50-55 crores of quarterly PAT. So when do you see that kind of trajectory being broken in the
quarter? You should see a breakout, as I mentioned to you. This is the first time that all my assets are being utilized 100%, barring a small portion of the export market. And we are no factory runs at 100%. We are running at more than 100% utilization. That's the kind of demand. We have never seen this demand earlier. It's a misfortune that the Indian story never really took off the way it should have taken off after COVID, 1 year after COVID, 1.5 years after COVID. It's only after the GST cuts that we see that, yes, there's a big change now.
And sir, your views on the CV cycle, has it kind of now kick-started and we are seeing next 2 years of good series volumes?
As I said, we have enhanced our CV production, and bang on time we are selling that production. So that's why the revenues are going up. I mean, if you're going to hit 1,500 crores, that's our target, to hit 1,500 crores per month on average from April onwards. We might just hit that rate annualized in March itself. You just wait for the exports to open up. Then there will be no excuse, no argument to discuss. Everything will show you a very increased margin, right from PAT to EBITDA.
Right. And sir, lastly, at the senior management level, do you guys ever contemplate that, the auto index is up 20% last 12 months? All the auto stocks are giving good generation for the investors, but we are one of the few people who have been a laggard. So is that something which concerns the top management and the promoters?
Of course, we are concerned and wondering why can't people read the good news. Everybody sold us off because the American tariffs happened. So as a result, the sentiment just broke. But this is what we want to tell the participants in the market, that we are not depending, we have surpassed our best performance in spite of losing exports to the US. This the market should see. And we had a very terrible second quarter. And that really broke the momentum along with the tariffs. So when the performance speaks for itself, you will see the results. I don't see any reason why they would question our growth trajectory. Had we not done this growth, we have beaten the industry, by the way. We have beaten the industry growth in this quarter. So if the market is not understanding it, then I think the market knows best. So I'm not going to hanker over that. I can only talk to you and explain to you my business.
Sure, sir. Thank you so much and wish you all the best.
Thank you.
Thank you. The next question comes from the line of Hitendra Pradhan from Maximal Capital. Please go ahead.
So thanks for the opportunity. Just wanted to get some things clear. You mentioned that, the exports were compromised by 300 to 400 CR, and you foresee 500 CR of additional revenue from US when the tariff situation normalizes.
And the investigation or competition is sort of brought to a conclusion in favor of putting taxes on them. Yes, of course.
Okay, so what is the your run rate annual US revenue? I mean, as per my calculation,
it's
it is
not
180
so much.
CR.
It's still there, but I would have to look at the number. We'll give that number to you through SGA. We'll give that number to you. We can just tell you the degrowth revenue to US.
Yeah, you mentioned the degrowth numbers. But these are the 500 CR that you're mentioning, that is on top of the current revenue you are generating from US, or
Exactly.
it is the cumulative number you are mentioning?
Exactly. So it's not a big number to the US, but if things open up the way we think they should open up, because I don't know how long the tariff situation will be in limbo, maybe 3 months, 6 months, we don't know. But we are hoping by end of March things should happen. And so next financial year is a clear home run for us once these tariffs are removed.
And it will be more like, taking market share from the big competition from Thailand and the other exports.
And then Vietnam, because they have no choice. It's only India.
And so these will be mostly like alloy wheels, and where the EBITDA per wheel will be
and let's not confuse. I have lost market share in steel wheels in US. I'm going to regain that back and a little bit more in steel wheels.
Okay, in steel wheels. Okay, sir. Thank you, sir. That's all from us.
Thank you.
Thank you. The next question comes from the line of Anand Kulkarni from Front Wave Research. Please go ahead.
Hi, thank you for the opportunity. I had a couple of questions. First, on our capacity addition. If I look at our first quarter's investor presentation, we were going to take our capacity for steel wheels from 205 to 270 lakhs, which is now curtailed to 210 lakhs. Also, alloy wheel capacity addition is curtailed from 53 lakhs to 50 lakh units. Now, out of the 65 lakh units, my understanding
Let me clarify one thing. One thing.
Yeah.
So that capacity that you saw in the presentation included the facilities in Bhuj. And those facilities are now being sort of scrapped, and we are putting in newer factories there. So obviously that's how we have curtailed our production of the projection. The capacity of our group for steel wheels.
Okay, sir. So out of this 65 lakh capacity addition, the current 12 lakh and 6 lakh is going for alloy wheels and aluminum metal. So what about the remaining 47 lakh capacity? Is there any plan?
So those capacities, those sheds are still available. Those sheds are still available to us, but there is going to be no production from those. We have, as I said in my previous calls also, that we have taken away 100 crores of equipment already to our group companies. That's why you see the expansion in Jamshedpur. That's why you see the expansion or some additional machinery in our Chandigarh plant and also in the Chennai plant. So 100 crores worth of equipment already we have used. Right? 100 crores of capex we have saved from the buildings and the roads. So that's 200 crores. I paid 140 crores for this. And I paid 140 crores for this, not only just for the assets. I paid to strategically stop the Chinese from taking over this asset in India. So both the things have come through with it. I have earned my principal plus my interest already back from this purchase of EMW. Yes, on the paper, the capacity comes down because that capacity was potentially there. I couldn't have denied that was the paper that we signed with the liquidator, that this is the capacity of the facility, and we saw that this had the potential. But obviously there is no market for such a capacity, and that capacity needs a lot of money to restart it. So we decided that we are not going to use these machines anyways. So we are scrapping them and utilizing the network, the infrastructure of the site.
Understood. Just one last question I had. Have we been able to reroute any revenue to our European trading arm to US or any other country?
No, we don't. We can't do that because duties are duties. Whether it's a European trader buying a product for US or we selling directly to the US, there is no possibility to evade duties or to circumvent duties in any way.
Okay, understood. Thank you and all the very best.
Thank you. The next question comes from the line of Sanskar from Iraya Capital. Please go ahead.
Hello. Yeah, so I have a couple of questions. First of all, can you check, are we adding any, if you are saying that we are operating at 100% capacity in aluminum segment, if I'm assuming, so is there any capacity expected to come on stream in the next quarter, or all the 1.2 million will come in the next year?
So as I said, we will hit the annualized rate of 5 million in the month of March. So you can see that we will produce more than 4 lakh wheels in the month of March. And that will continue till the next facility comes in. So the next facility will come in by October, and hopefully by December we can start commercially supplying wheels. We have a very strong order book. So let's see how fast the customers approve our facility. But you're right, there's going to be no more addition of capacity within the existing network.
And would you be adding any on steel? I'm assuming, given we are at 75% and utilization, is it expected to move up given the demand that you are seeing within the domestic segment?
That's a great question. So I think there will be some brownfield expansion for a paint shop for a tractor business, and that's going to be around close to. I think that will all be done within this year's capex that we have budgeted for. So I don't think next year there will be anything. Maybe there's a small paint shop that but toward the end of that's about 10 crore rupees, 10-15 crore rupees. So it's not much more than that. I think all the expansion we've done in Jamshedpur has come to fruition. In January, we are going to have a record production of our truck wheels. So and we'll have record sales of truck wheels by a big margin. And I think steel wheels we are suffering because of exports in Chennai to America. But Chandigarh facility is fully sold out because of great tractor run, and also the general pull for the small car from Maruti is good. So we are able to fully utilize our facility, and we don't have no intention to add capacity here. In fact, we have done all our expansions for truck, even scooter wheels we've added. Yeah, we might add a line, but again, these are on drawing board. So I think maybe next quarter I can come and talk better about that. But yes, things are looking very buoyant, and most of our expansion has happened. But there will be some expansion in another rim line, for example, for a Chandigarh facility, because we are getting traction for bigger wheels now. And since tractor is growing, this line is required. So again, this expansion will cost not more than 20 crores or 15 crores, let's say. So we'll come back with this new capex for next year. But for now, whatever we've done this year has started to play for us. We are able to use those assets to produce.
Understood. So, in totality, like what can growth do you expect within the steel segment specifically for the next, let's say, FY27 or even also next quarter?
We did a quick check. Yeah. I mean, here we concluded a turnover of 6,000 crores. I don't have the breakup, but I think 20% majority of this growth is coming from tractors, trucks, and aluminum. So aluminum would be number one. Then it will be followed by trucks and tractor, or trucks and then tractor. So these three segments are going to be the reason for the highest, 20% growth. So among steel wheels, you can just count tractor and truck, and aluminum you can count aluminum wheels for pass cars.
Understood. And apart from steel segment in the export market improving, what are the other drivers for your EBITDA margin improvement that you are guiding? And
so as I mentioned to one of your colleagues earlier, that there is a better realization in the high volume pass car business for us, because we have been able to negotiate input cost increases from our main customers, and even the newer programs we've gotten at a newer price. So there will be an increase from that aspect. Plus, the tractor steel wheel business is doing phenomenally well, and it is produced alongside the pass car business lines. So that is adding to a capacity utilization there. And so that's going to improve. I mean, if the tractors do as well as they're talking about, then we might see another 10% growth next year, and that is like stupendous. And for that, we will need a paint shop to sort of paint more wheels. But that's also a work in progress for us. We should be able to increase our market share. Let me put it this very clearly, and let people record this, that we will be able to improve our market share across all the domestic segments. Profitable domestic segments, let's put it this way. All the profitable segments, and namely they are truck wheels, tractor wheels, and aluminum wheels. So yes, you will see a market share increase as well as margin improvement because of the higher value addition wheels that we sell in addition. Because growth is coming from tractor, truck and aluminum wheels. So please remember this repeatedly about us, that if the growth is coming from these segments, it means more EBITDA per wheel.
Understood. Okay. Thank you.
Thank you. The next question comes from the line of Bhavesh from DV Investment Advisors. Please go ahead.
Hello, sir. Am I audible?
Yes, you are.
Yeah. So, I had this question regarding the steel business. Like barring tariff part, so our steel business has been languishing from like past 6-7 quarters. And then in the past, we have mentioned that we have signed some new contracts and we have renegotiated the pricing part. So, like, what is the status on those contracts now, currently?
So, point is that, as I mentioned to you earlier in the previous calls, that we deliberately left out business from Maruti for car wheels. And because the margin was too low to work for us. And that is the right strategy now because right now we are fully sold out and we are sold out with better margin wheels, namely the tractor wheels. So I don't know what your question was. I mean, I didn't follow the gist of the question.
No. So I was just wanted to know the reason. Like in the past, our steel business was languishing, and then we stated that we have signed some new contracts to compensate for the same. So I just wanted to know that what is the status of those contracts now?
I don't know what contracts are you alluding to. I
No.
can't take that.
No, some pricing related agreements we renegotiated with the customers in the past.
There has been an increase, obviously, yes. We have negotiated with two important customers of ours, and they have given us a price increase, and it's getting reflected slowly. Every year, next year is going to be more effective, but this year we've got some increases already. Yes, that is true. That is true. But the business itself is languishing from the past car side because we don't want to choose businesses that don't pay us a certain EBITDA per wheel. But we are lucky to have a growth in the tractor segment, and that's a well-paying segment for us. Our capacity to get the same lines that produce car wheels can produce tractor wheels also.
Got it. Thank you.
Thank you. The next question comes from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Sir, thank you for the opportunity. Sir, I'm trying to understand when we say that we have gone through pricing negotiations with our customer. There has been industry consolidation. Our aluminium wheel share has increased, but still in FY24 our margin per wheel was 260 rupees. Right now we are at 270. Maybe in Q4 will come to 270 rupees. So what is the where is this lag coming from? Has the pricing power not with us?
The lag has come from Trump tariffs. Please try to understand this. Trump, our export business has been compromised to 300 to 400 crore rupees, and that was the only business that in the steel segment, in the car segment space, was giving us the bread and butter and the jam, everything. And that evaporated, but luckily we picked up and grew in the aluminum segment. We grew in the truck segment, and we grew in the tractor segment thanks to the GST reforms. So this is a recent phenomena. Don't start thinking that we did something wrong in this period. The whole industry was suffering. And yes, we have been able to increase our prices with the past car wheel business. So overall, the profile of the margin is improving. The laggards are beginning to run better. There is obviously, as we grow in volume in the aluminum segment, the margins are coming under pressure because there's competition. But at the same time, with higher volumes, we are able to taper off our fixed costs. So you will see performance now. The performance has just started since, let's say, November. 3 months of solid, and every month is a better performance than the previous month. And you will see that when we hit 500 crores in the month of March, you will see from where we were last year. We were at 360, 370, if I recall. From 360, 370, 70 to 500 without exports. That is something that you must applaud and understand where the company is strategically headed.
Right. Sir, this 300-400 crore business from US, this was on annual basis or right?
Annual cost.
Got it. Sir, just one question. Sir, so if I consider all these things, if I consider the US tariff issues, they are present for the next few years. So when can we expect to reach a 300 rupee EBITDA per wheel, considering the customer mix change, considering the product mix change?
I think you asked a great question to me, and believe me, you come in the next conference call after this quarter is ended. You come and I will give you some projections. I've mentioned to your colleague also earlier that we'll come back with projections, but I promise you that this 300 rupees is also my dream, and we are very close to that dream. Give me 3 months of this quarter to sort of understand our product mix, cost mix, and product mix. And then let me extrapolate as to what we are looking forward to in the next 12 months after this quarter ends. But yes, that's not something that is unreasonable to ask. 300 rupees is something we should expect this company to do, based on the fact that we are utilizing our capacities to the full. And there is big demand for our value-added products.
Got it. So just a final question, sir. What would be a greenfield cost for any player to set up this 1.2 million wheel capacity that we are setting up at the AMW location?
I think if you look at industry, I don't need to give you names. You can go and check other industry companies that make these investments, and nobody will come less than 500 crores or 600 crores. I think the latest investment is at close to 800 crores for the same volume. You have to check. Please check. Ours is the lowest cost of investment in the whole industry. You can check across the companies. You can check the balance sheets of all our competitors who do aluminum wheels. You will find out where we stand.
Right. And sir, we have space. We have space at the AMW location for further capacity addition for aluminum or steel wheels.
We have plenty of sheds, plenty of land, and very good access to the port. We will look at newer things, and we have some things in our mind, but that'll take some time. But for sure, please join the call next quarter, and you should be the person asking this question the first time.
Yeah, will do, sir. Thank you so much, and all the best.
Okay, then. Thank you all. I think it's time for the meeting now.
Yes.
Okay, thank you.
Yeah.
Ladies and gentlemen, in the interest of time, that was the last question. I now hand over the conference over to the management for closing comments. Thank you, and over to you, sir.
Okay, I think closing comments are the same as I told you in April sometime last year, that this is the best time to do business for us. We have a full order book, and we are cost optimizing our facilities. We are investing money in digitalization. We are investing money in AI, and we will be very future ready in next 1 year. I think these are this theme. I think the investors should ask me when I meet next time with them, and we will definitely now. We have no reason to complain now. The orders are there. We are able to execute the orders. The capex has been done. Everything is all set for a home run. Thank you all. Thank you for coming today. Bye-bye.
Thank you. On behalf of Steel Strips Wheels Limited, that concludes this conference. Thank you for joining us, and you may now disconnect our lines. Thank you.